Okay, sorry, and I tried to click. Oh, sorry. Is it going to
Okay, that
15?
one.
Yeah, sorry, yeah. Okay, so if you go to, I just try to see now if you can see where the, okay, I think this was that last pull until when the day ends. Maybe just go back to an hour. That this was the break of was sorry, let me just it's too strong. You see the break was struck on a blue line with the
Yes,
day, so it clearly shows. So if you then go into into H1,
yes,
this where it went. So with the day of the starting of a new day, there's a slight pullback because that's normally
right.
what you expect before it will continue with the downtrend. And you can see on the hour it's respecting and breaking the wicks every or almost every time. So it's a clear downtrend that we experience on Friday.
You're talking in the long term or in the short term in this case?
I'm just talking for the day now and on a 15-minute time frame. So long term, that it also appeared to be a downtrend. Go back to the day because it didn't go high enough to break this level. So long term,
Correct.
we can continue seeing a downtrend. It might pull back a bit because it was quite a pull down here, but we could see a bit of a pullback while it continue. But that is just reading the chart as it is at the moment. It can
Yes,
still go up, but I mean from the charts and from reading the pattern, it's a downtrend.
it's in a downtrend. Okay, so do you want to add something more?
No, that's okay.
Oh, yeah. Oh, okay, so there are more people right now coming in.
And can I add something more? It's Muna.
Oh, sure. Hi, Muna. How are you doing?
I'm fine, and you?
I'm good. So you go ahead if you want to add something more.
Okay.
So how do you see the market?
Okay. What I just wanted to add is in the training video, you told us that, can I annotate using your, maybe, yeah.
Oh, sure. Hold on a second.
Maybe I just annotate. Let me just annotate.
Okay.
Or just in the training video, you told us that this was going to be the order block. And indeed, it was the order block. You can see here. Yes, which says that your training is up to the mark. And then like Joseph was saying, that is hit this order block and is going down now. This is a monthly low, It's the black line. This is the monthly low, which came here. So it has to break this monthly low because it's in a downtrend and it will reach the monthly minus 27 Fibonacci at least before before it retraces on the daily time frame to continue the downtrend, or it retraces to change the whole trend.
If it pass which one? If it pass which level?
I'm saying if you make it smaller, I will show you that if you make the chart smaller, I will show you that minus 27.
Okay, what time frame do you want?
No, just this daily time frame is okay. Daily time frame is okay. Okay. If you make the chart smaller, if you squeeze the chart. Yeah, I just wanted to see the minus 27 of the, it's not showing. That minus 27, this downtrend will go down more
here.
Up to, yeah, okay. Yes. This is what we're talking about. This downtrend is going to come at least to here because this monthly low is at this spot, and because it's a downtrend, it will break this monthly low and either start retracing from here like this to continue the trend, or it goes up like this to now continue in a new uptrend.
Perfect. Yeah, that's a very good understanding. Okay, so if I were to read the market structure, this is what I am gonna do. Okay, so usually that both of you are correct. but this is like when I said it out loud to myself. So first, I want to mark where is the main structure, because basically in every single time frame, from higher time frame to lower time frame, even on M1, you will find the main structure and the minor structure. So let's say right now we are on D1. So I would consider, let's say this is the main structure. Let's just take for the past couple of months, like no less than 6 months, okay? So here, you maybe disagree, but this is the main structure to me, okay? So
I agree.
Okay,
I agree.
this is, okay, so this is the main structure with me. So all this small, like between bullish and bearish, you see this is go up, go down, up, down, up, down. These are all minor structure. Now, based on main structure, sometimes I use a trend line, not always, but you see like something like this is obviously a downtrend, right? So let's say you can do this on any time frame, okay? Because I am more into day trader and also a swing trader. So I like to see it at least from D1. But you can do the same something like this. For example, from H1 to M15 to M1 or M15 to M1, it doesn't matter. The structure are always contains between main structure and minor structure. So you want to make that in your mind. So you're not gonna be confused. For example, if it is, let's say here, okay, there is a break above, right? You may think, is it start reversing? No, to me, the market, when the market is around this area, okay, to me, the market will start reversing to be a buy if this main structure is broken, or to say the least, probably this one, you know? So if there is a break of structure here, I do not consider this starting to be a reversal, okay? A reversal, because somehow like what happened, this is not like inside, but you see like sometimes after here and then it bouncing and then it could go lower. So that's why I mentioned last time that even though like when you trade a reversal by using a chalk, okay, there could be a chalk from the minor structure, but as if it is a chalk from a minor structure, it does not mean a main reversal, because the main reversal should always come the main structure. But can this be the beginning of the chalk for the main reversal? It could, but we don't know. But the probability is not that high. Does that make sense? So you do not want, for example, because this is a downtrend, okay? So because this is a downtrend like this, and then you see here, there is already a break of structure, and then you just aim the last high over here or over here. You do not want to do that because it is a downtrend. If there is a minor structure break above, you just want to aim the next order block over here, right? So in this case, for example, this is a break of structure, but it didn't go, and then it goes directly and then bouncing over here. You see, so this is, there is no entry for you to take, for example, over here, because I think this has already been taken. Does that make sense? Because it didn't give you a chance to go like coming back and then go touch this order block. Okay, so if it is a minor structure, you want to aim the next order block. But if it is in the main structure, like for example, here is this is a downtrend, and here is the break below, and this is already lower than the previous one, and so yes, you can aim this low. But you know, right now you already have this indicator using the Fibonacci retracement. Like you said, if this monthly low is broken, there is a higher probability the market could go to this Fibonacci minus 27. Can it go lower here? If it breaks, there is possibility, but not as high as the probability when it comes to minus 27. Minus 27 is like almost 90% always reached, regardless it is a minor or main structure. Whenever there is a break below monthly structure, weekly structure, or daily structure, it has more than 80 to 90% the probability that the market could go to minus 27. So if you are a day trader, for example, you can also do this for your own. Okay, so when I am trading, for example, I have not got any alert yet, but I want to find my own of the order block. You can go to H1 for day trader. Okay, you can go to H1. I know that this is daily. Look, if you see, for example, on let's say, go back here a little bit. This could be just a retracement on daily, right? But this is an uptrend on hourly. So if you see every single candle, like literally close higher, like this, okay, this is higher, 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 every single retracement from its step. So basically, what you can do is that you can draw the Fibonacci manually. Like, for example, this is the last high, right? And then you go here. So you can make, like, let's say, for example, a very small break of structure here if you want, and then the price come back here, taking this. Let's say you decided this as your order block. Okay, maybe like if you are like early in the morning, you wake up early in the morning, if you are the same part like in UK or in Africa, back here, let's say this is your order block. In this case, you can aim more or less the 27 could be around here. Does that make sense? So instead of you are aiming the last high, you can put it at the 27 around here. Why? Because you know the market keep closing higher, 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 and it creates higher high. You see, like over here, higher, higher high, higher high, higher high. This is based on daily. You can take a look like the last 5 days. Usually it can make a trend. You see sometimes more like this one. Look, whenever this is higher, lower, lower, and this is lower, you know that there is probability the market could go lower. But sometimes when you look left, there probably some order block or some you call it imbalance to be filled around here also. Like that's what I usually do. Always marking, if you well, after you understand or you are accustomed with the market structure, it will be just like when you read regardless time frame, okay, like this. You can just read which one is the main structure or the minor structure. If something like this you do not see, maybe you will consider this a sideway and then there is a break below, then you can start looking for the main structure. But if the main structure cannot be seen, you just keep changing the time frame, because over time something like this, some of you may not think that, okay, this is not really clear to me, so which one is the main structure and which one the minor structure. You just can keep changing. But in this case, take a look on D1. It's quite clear, right? Like each box is like clear. So this is a downtrend. Sometimes it's not clear, like when you go to, and it could be weekly, it's not clear, but this one is clear in a downtrend. So here daily is clear on a downtrend. On H4, sometimes when it's not clear, you can make this smaller, like Muna said. And then so here you see, like, okay, you may as well think like this is several between downtrend and a little uptrend, right? From here, 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 here. This is This is the main structure, probably like here, 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 and then probably a little go higher. We don't know, but you just do not want to make every time there is break above, meaning you start reversal. You want to always understand, is that from the main structure or from the minor structure? You always want to focus between the two types of the market structure, because if you can master those market structure by keep moving like from different time frame, which is clear to you, in this case, obviously D1 is very clear. If you are a day trader like me, let's say you always enter from H1, clearly I only want to keep selling at this point. Does that make sense? Because on D1 is in a downtrend. So can I buy? Of course I can, but that will be from the minor structure, and you do not want to go really aim high if your entry is, for example, from H1. But if you go to M15, you probably still can get 1 to 10, even though it is a little reversal from the minor structure. But based on D1, it is a high probability that it is still in a downtrend. So this is a very strong structure here. If this breaks higher, then there is probability the market to reverse. Why? Because to me, this is the main structure. So this is the main structure. If this one is broken, then there is a probability the price going up. But if you see like this is the break structure only over here, this is not the main structure to be. This is just minor structure. Okay, now I will go to, unless you have a question around on euro dollar here. Yes?
This is James. How are you?
Oh, I'm good. Hi, James. How are you doing?
Good, thank you. Can I add something as well, please?
Okay, sure. Do you want me to give you control?
I can just draw some lines. I can just annotate. It should be fine.
Okay.
Thank you. So on the swings that you were talking about, like this was a swing. I did a course a while back, and in that course, I learned that when we go, so when we have, for example, here bottom and top of the swing, when we move down over 50% between the distance between those highs and lows, those two swings are confirmed. So these two swings are confirmed, meaning that we are still going down. And in this case, we've got imbalance here and order block around here. So it's very likely that we come back up to at least fill this imbalance zone to go down or even go higher here. And what Kyle does is he normally tries to fill his order around here on top on 1 minute time frame and then hold it all the way down to here. That would be maybe a trade, a 1 to 100 trade. If you enter here on 1 minute time frame and just risk 1% and hold it all the way down, if you're patient enough, you can double your account with just that one trade. Needs a lot of patience. And what he does is he does hedging as well. So when it retraces back on the way up.
Who is he? Are you talking about Kyle or who?
Kyle, yes.
Okay. All right.
Yes, and then what he does is he does hedging as well. So when it goes back on the way up, like on hourly time frame or say 30-minute time frame, he takes some long trades and just close them early because it's counter trend. But mainly if we just want to be pro trend, it's a good idea to enter here on very short time frame, like 1 minute or 5 minute time frame. Even if we get stopped at once or twice, it doesn't matter because we can have a 1 to 100 trade if we are patient enough. So if we lose 2% of our account to make at least 100 times that or 50 times that, it will be worth it.
Yes, if you are really into M1, yes, that could even on every single daily candle, every daily candle. Hold on, let me clear our drawing first. Now let's say to M15 first, okay? So this is 1 day. This is just 1 day from here to here, or this is the last daily high, this is the last daily low, and this is just 15 minutes. Now, if we go, for example, on daily, look at that. This is the period separator. Look, from here, the last high to the last low. You have no idea if you already understand like the market structure, like you want to follow Kyle or the simple one, like what I'm doing. Basically, if you already know the market structure, how to read the market structure between the main and also the minor one, you can trade it just like that. Like for example, here, I know this has already happened. It looks like a hindsight, okay? But I just want to give it to you like an example. This is a downtrend, right? This is lower, 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 lower. And if you know the market keep getting lower, so you will think this is the first order block probably to you, right? It didn't hit.
Yes.
And then here is another order block over here. This also didn't hit. And then here is another, this one is another order block from here, right? And then this is still keep going lower. And then this is another order block. Sorry, this one, I guess here, the big one. This is another order block. And here, if you want to take it, this is also another order block. So maybe you hit one stop and then going down. There are a lot of chances if you want to just focus.
And is there no order block here?
Where?
Here, where I'm annotating. This place, is there no order block here?
Can you use annotate?
Yeah,
hold on.
There, this one here.
Yeah, this one is an order block.
No, not that one that you've drawn. I'm saying the previous.
Here.
Yeah, this one.
Yeah, actually this one and also this one.
Yeah, so if you're taking your trade from here, and then it will be quite a long trade.
Yes, you're right. So if you consider this as what is it? The break of structure. So here, you know why I do not like to trade too complicated, because sometimes, like let's say I'm talking about this one, a losing one. If I believe the market is in a downtrend and then I know, so here there is a weekly low and it's already broken, there is actually higher probability the market could go to weekly Fibonacci 27, then what you can do, you just can keep selling. If you are following the main structure, you will be on the good side, even if they are losing, okay? Like in this case, like I would just re-enter if I believe that the market is still gonna go down. I believe the market is still gonna go down. Why? Every time when I look at the high, it is all lower high, and most of the lows are lower low. So here, maybe I will start to doubt, for example, here, because it's all the same and it started to be higher. But if you still believe, you just can re-enter and you still can make, I think this is like about 1 to 5 more, I think 1 to 7 or 1 to 10. I don't know. Let's just see, even if this, oh my God, yeah, 1 to 10. But I am not, I'm not doing on, what is it, M1. You can trade on any time frame, even just by a basic break of structure. You know, when it comes to the trading, to understand the market structure is the most important thing. And then the most important thing of all is that when you see the break of structure, you just want to see, is it break above or break below? So after the break of structure, usually you will see order block. It's that simple. If you want to take a look on M5, okay, this is on M5. So I was sometimes, you know, like, but I honestly do not trade something like that in my main account, okay? When it comes to main account, I always do it on day trading or swing trading. But sometimes when I have, like, let's say, consider like a small account, like for example, $500 or $1,000, I can do like, okay, I will just raise 50%, oh sorry, 0.5%. Like if I see, okay, this is a downtrend already, right? 1, 2, 3, and then especially this is lower. This is breaks the, let me make this big. This breaks the, for example, this is on M5, okay? This is breaks the higher, the daily low. So I know the price could go here, okay? But they're usually, because this is on M5, so the, and then also I can look left there, it is also weekly low. So instead of aiming daily 27, I can aim this is weekly, right? Yeah, weekly, 20 daily, whichever that further. In this case, I will do it daily because weekly is shorter. So sometimes between daily and weekly is longer, you know, longer to reach. So if I see, okay, this is started like break below, and then this is lower again and going up, going down, going up, going down. Maybe I will start now here. There is the break of structure. Maybe I will start looking for sell here. It didn't work. I will just keep following. I will just keep following. Sometimes it doesn't have it doesn't hit like this, and it's okay. But that is also you know, a correct way if you want to trade it just on one time frame. This is not something I would recommend, because if you want to trade it on M1, at least you want to take a look from H1 or M15. Remember when I told you about the candle break when you received the alert, that you can do it directly on M1. You see, let's say here, okay, let's play it around here. Let's see, like let's say this one. This is break of structure, right? And then this candle is lower. This candle is lower than the previous one, right? And then here, it breaks the daily low. So you know there is a high probability that the next price, the next hour is gonna go lower and reach this weekly Fibonacci 27 or even daily. So when you see on hourly is low, what is it? It's close lower than the previous one. At the next candle over here, you can go directly to M1. If you just want to trade it on M1, for example, and then you can look left. Okay, this is my order block, for example. Well, this is 27. You may hit as stop loss, but if you believe, then maybe you can pull like me, like for example, 2 pips is just more than enough. It hit the stop loss, you just put it again. Let's say it hit the stop loss again here, which is highly unlikely because there are space over there. So you just want to put it in there and then aiming 1 to 15 or here, Fibonacci 27 of daily, like yeah, 1 to 15, 1 to 16 probably, with 2 losses, that 14R. You can also do that just based on hourly. This is to me the simple way if you want to scalp. You can go to H1, just look, just wait for the next hour. Is it higher or lower? Remember, it will not always working. Let's take a look, okay? The one which is break higher, and then so the next hour supposed to be going up, right? Supposed to go higher, but then you can go here. Like how are we going to react? Like from here, we started here, right? And then you probably think this is the order block, correct? You probably think this is your order block. I would lose over here. Maybe if I were to try like 3 times, all of them loses, that's it. Let's say I lose 1%, but take a look. Take a look. For almost every single, even on the retracement, every time the candle break lower, it goes lower. And usually the next one is like inside candle. So you want to take a look when it breaks lower, and then the next hour you can go to M1 and looking for the entry, like over here. If you want to scalp, okay, if you want to scalp like this is less rules or anything, you know, not so many rules. Just from here, for example, this is already continuation. So you started from here, then you wait. Maybe because you started from here. So when you look left, this is your order block. It didn't work, it didn't hit. And then so where again? So this is the order block. I don't know, is it hit or not? It doesn't hit. And here is the order block again. And here is loses, one loses. If you consider this an order block, this small one, one loses. And then here is the order block. And then there are a lot of chances when you are doing like this, you follow it based on the previous candle, you can get at least 1 to 5. You want to aim always 1 to 5 minimum when it comes to M1. Okay, unlike you want to do it like, for example, directly alert from H4, H1, even 1 to 3 is already good if you trade relaxed like me. But if you want to kill it like on M1, you want to aim at least 1 to 5, because you will find some more losses because it's too fast. But in terms of winning rate, 1 to 5 is easier on M1. I don't really do it because most of the time when I discussed this with Marcus last time, he said, I tried the strategy on M1 and instead of me scalping quick and it ended up sitting down in front of the computer like too many hours. And that also happened to me. And I tried it scalping in 2 weeks and it ended up, sitting down in front of the computer for too long. And that is not for me. You see, I also want to balance between my offline life and also online. I want to balance, but some people are different. If they really like to do this, if you can master like this without complicating yourself, there will always be entries on M1. But the rule is so simple. You do not want to overcomplicate it yourself. You see, but if that works for you, like for example, for now, only focus on US dollar yen using Wyckoff, for example. Wyckoff for me is just like too complicated. I just need to find out where the market break above or break below, and then I will just trade it the next hour. Like to me, for example, if this is break above, if this is considered break above, so I will start looking for buy opportunity. Remember, one candle is 60 candle on M1, right? One candle is 60 candle on M1. So you want to learn, if you want to do scalping like that. Look, now it is from here, right? And it goes probably here is your first order block. All right, it didn't hit, and then now this one is broken. So here is the first order block. Without rule, you just do based on candle break. That's it, because we know it breaks the high, so the price gonna go higher. Just based on that. Here you will lost. So you will lost.
And
yes.
Sorry, can I add something, please? With scalping, it depends on your psychology as well. When I scalp, I mean, I just started it recently, towards the end of last week. On Friday, I took 3 losses on M1, and the last one was a win, but it was a 10R. And I wasn't sitting at the computer. Every time I saw a setup, I just set a limit order. So when I had my order block, I set my limit order, stop loss, take profit, and walked away. I came back to it after 45 minutes. It was a loss. I kept doing it 4 times. I only spent maybe 30 minutes overall for those 4 trades. And then after I checked after a few hours, the last, I'm just demoing it for now to see how good I can do it. But the last one gave me a 10R. So my gain for the day was 7R. Even though I had 3 losses, because as you said, you can't go for higher RR.
Okay, look, I forgot. I think I missed something. I said, if you want to do it like really clear, like this, what I'm doing, H1, break the high, then the next one is higher. That will not take too many hours. I'm talking about when there are too many rules. Like last time, yes. Remember the king pattern that was like how Kyle doing? It should be like this, it should be like that. There is the, for example, there is the FEG, and then there is, there's supposed to be liquidity grab, there is this, and too many rules. That what makes we keep waiting and losing, or simple thing without any rules. Does that make sense? If you trade
Yes.
this way, if you trade this way, like what I'm showing it to you, trade simple, like every single break of structure, you can actually find easily a 1 to 5, 1 to 10. Why should you wait? The last time when I said I end up sitting down so many hours for 2 weeks in front of the computer, that was when I tried to learn Kyle's strategy. It should be this, it should be that, and it's become impossible for me. But it doesn't mean it doesn't work. It probably worked for him because I know him, like he's very smart, but maybe that strategy is not for me. So for everyone who wants to do scalping, because we come up with this conversation now about scalping on M1, it is only a suggestion for me. If you want to really having too many confirmation, you will usually end up sitting down in front of the computer for too long. But if you trade simple, you just check out, like for example, just use H1 or H4 candle break. And if the candle break the low, the next candle, you just want based on the time frame. So
you just go short for an hour.
Yes, you just go short for an hour, and that's it. It probably will finish less than an hour, right? That's what I'm talking about.
And you just, yes, and you just use break of structure and chalk on M1. You don't have to ask for too many other confirmations.
Yes, yes, correct. So when you do that, you can also share, like in the group, for example, hey, especially euro dollar, because it has a very small spread, right? Even though that over here, for example, hey, the previous hour breaks the low. Let's look for the sell opportunity for the next hour. Yeah, the new hourly. That's you can also do that and see how it looks, see how it happens. You see, like how many losses you will get if you follow just exactly that simple strategy. You will actually make more, by doing that hour by hour, including, let's say, because not all people have the time or not fancy of scalping, for example. And if you go on D1, okay, this is daily. You can also do the same, right? Like, for example, here, let's say this one, now this is break of structure. So the next day on Monday, we prefer to look for the lower time frame. Look,
yes.
The lower time frame. So it could be this, it could be this, it could be this. That is the only thing. So if there are 3 choices like this, okay, here's what I do. If there are 3 choices like this, it is up to you if you want to put order over here. But if there are several, I would suggest you want to put like a sell stop. So let the price goes up a little bit first in case it reaches the second one. Does that make sense? So you do not want to put.
That's very smart. Yes.
Down. Yeah. So you
sell
just
stop is better.
Yeah, sell stop, let it go a little bit up, and then you want to put sell stop probably at 50%, or even the whole candle is okay. You can also do that. So you can go to any time frame if it is based on daily, okay? Daily candle, the next one, for example, the next, what is it? The last candle is going lower. So the next day I will just sell. Like here, it often works even like on the small retracement. This one is close higher. The next candle, I can focus on buy. You see, even though it is actually like coming back down, but there are times for you to actually going up. But also, if you do not want, it is better for you to always understand where the market is heading, and you want, let's say here on daily, it is on a downtrend, okay? So you do not, maybe you want to ignore when the candle break the high. You only want to start looking when the candle break the low. Look, let's say you start from here, and this is already create lower low, and then there is break the low for the first time here. Break the low for the first time here. Imagine that the next couple of days, it will be break the low. It is like how many pips, like until the lowest here, 2,455, 245 pips. So if you do this, if you do exactly even just by candle structure, you see, by candle structure, the candle break, you trade simple, yeah, you can pass any, you can pass in 3 days, account. So hold on a second. Let
That's
me
great.
read, yeah, let me read this. There is John Noon. Hold on. Let me read this. I have the $17 per month order block alert. How do you get template that? Oh, you mean this template? John, this template is coming from an EA. It's Starseed FX tool. So it's a starseedfx.com. Oh yeah. Look at that. Azdan is already replied. Okay.
Can I ask something, Anne?
Sure.
You said that when we have a few zones in that previous example, in the order blocks that we had 3 of them, you said we set a yes. You said we set a sell stop. So with this tool, how do we? Because I know that if we have our entry under the price, it will be a sell stop. But how do we do it here when it's above the price? Do we just drag the entry below the
no, you just
could
you just let
show
the
it,
price.
please?
No, you just let the price, okay, passing this blue one first. If you put it
yes,
right, passing this blue one first, it will automatically become sell stop. So if the price still below this blue one, it will become sell limit automatically. So the tool will recognize like
you just drag your entry below the stop loss. Okay, I got it.
Yeah, right. So let me answer several questions here. So there are several. Hold on. Oh, someone's still asking about the price. And it is a lifetime for 5 licenses. Yes, 5 licenses is for 5 computers. It can be VPS, laptop, desktop. So if you want to have like 10 MT4, for example, on your one computer, you only need 1 license. 5 license is for 5 machine. Okay, so what will be the best pair for scalping only? Sean, I would suggest look, if you consider M5 like me is scalping, then you can trade majors, all majors. But if you are talking about M1, I would suggest GU and EU. Okay, but some people like only euro, dollar yen. But you know, when it comes to minute scalping, I think EU is the best. It's not important pair. I like Isman plus is. Oh man, congratulations. Congratulations, someone is passing the what? Yeah, look, you just, every time you receive the alert from us, I told you, because I have got so many questions that you know, sometimes they are confused when they receive alert from us, like what to do. I always believe it. I swear that was, I never used that before, but it just came to my mind. Like the last few days, I always want to help. I always believe, you see, like when you always share your knowledge, like the universe give you free ideas, because maybe the universe or God, like whatever, like you believe is will, you know, that will give you a new knowledge, because he knows that I'm giving it to share for the good of others. And this H1 candle break for the alert, it was hi Tryon. Okay, so it was a help. Last time 1, 2, 3, I thought it could be a good idea. I have been using that 1, 2, 3 for a long time, but I think H1 candle break is way better. And I see even my husband, how did you get the idea? I don't know. I was talking with you and I see like, okay, this candle break is simple, because basically the price, when we always want to go to M1, actually the new hour is always the best. You know, when you wanna trade, like the new hour, the new 4 hour, the new daily. I never tried every M30 or M15, but it depends on where you want to trade it. Really, if you want to trade like scalping, for example, or using the order block alerts, that will be it's just trade it as simple as possible. Like you can use FVG, you know, fair value gap or gap imbalance as you like, but I always see trade as simple as possible. Just using the order block is the best way to go. Whichever the
can I ask something, Anne?
Sure, go ahead.
So as you said, on 1 hour time frame, when we see a break below previous candle on hourly time frame, we can just scalp on M1. We just can scalp the order blocks on M1.
Yes.
And use break of structure. That's very simple.
Yeah, it's very simple. Look, also try to be you know, as simple as it is, but you also want to be a little picky. For example, let's say here you already see the market is already sideways. You do not want to do that, so maybe you want to put what is it, whatever, like the line over here. If the market breaks the low, then I will break this low, then that is where I will start trading. Something like this, the market break the low. Oh, this is really nice, right? This is really nice. This is the time for you to harvesting. But when the price has a little movement like this, it looks going up. Maybe it is good for you, but you can see there are times even on H1 to be a little trending in a day. You see, but there are also time like, look, like this, you can take advantage. Like this, you can take advantage. But maybe when you see the market is hesitate, you know, well, I'm not talking about the midnight, obviously, but here, usually you want to see like when the market moves, this strategy will work even including in Asia session, right? Look, this one price breaks below. Even there is a little chance over here and then breaks higher. This one is higher, but this one is not higher. And then here's lower, going lower, going lower. Look, the losses here, if you're looking for buy, because this is cross higher, right? This candle break the last high. So you expect the next candle go higher, correct? But it didn't. Now, consider this one is a losing one. But then take a look, how many chances you get is breaks below 1, 1, 2, 3, and you only failed in one of these. So you can aim 1 to 15, 1 to 15, probably more from here. So there will be some losses because when it breaks lower, but the price didn't go lower on the next candle, there will be. But comparing to how it works, I think if you choose it carefully, you can get over 70 to 80% higher chance to have a winning trade. If you aim even just 1 to 5, 1 to 5, 1 to 5, or, you know, actually on M1, you can aim like 1 to 10. If you master that, because, you know, as much as I can see, there are a lot of money in the trading world. I don't see myself. I really want to keep living, make money out of it. And especially, you know, to be honest, maybe if I have a child or if I have children, I will keep doing that, but I don't. I don't. So I already feel like enough for me on trading, day trading, H4, and I have got like what I want. Everything is enough. So I do not put myself into trading all the time. I want to enjoy my time. I already make it, but if you really want to do that, you can. And you know, there are a lot of money, especially on M1 by doing 1 hourly. I just look at based on the history as oh my God, people literally should be able to pass any challenge in a few days. And that, I think, who is that? Tryon. Yeah, Tryon already make it in 3 days. So if you really understand the market structure, even just per candle, break hourly, break daily, you know, break for hourly, and then trade based on that direction for the next candle. On the next candle, you will be in the positive and just trade the order block that way. It's that simple. So is there any other question? So I want to let someone know. I want to ask someone to read for gold or Bitcoin maybe.
Hello.
Yes.
Yeah. Trips here. So I just wanted to ask if you could go over, like, give us an example of what you just said now. You said at the 1 hour candle break, we look for order blocks on the 1 minute. Can you like give us an example, visual example of what you just said now? So like you said, the next candle has to be a bearish candle if there's a break to the downside. So can you give us an example? Thank you.
Okay. Okay, what pair do you want? You want it for scalping, Eurodollar or GU?
I trade on the 5 minutes. So can you use the 5 minutes for entries?
Okay, 5 minutes for entry. I would suggest using H4. H4 yes, candle.
Okay. No, can use the H1 candle or the M30 candle break. Okay.
Yes. For M5, okay. Let's see. I never do that, okay? Because I usually use H4, go to M5. But let's see. So let's see which one you want.
Sorry, and that's what I'm saying. I'm saying you can use the H4 order block, then you look for entries on the M5, M3, or M1, yeah. Whichever way it's called.
Yeah. So this is, for example, this candle breaks lower, right? So you want to start it this hour. Consider it was not there yet, right? So at this hour, so you go to, for example, this is on H1. So if you want to go to M5, yeah, I'm sure you will still get some of the entry. Let's say here, it didn't hit. If you take this one hit. Oh, yeah, you're right. On M5, you still can make it. You just want to try to, wow, yeah, okay. This is about, you know, I'm chicken. So maybe 1 to 6 over here, I would close, or 1 to 10, I would just close, you know, but you can make it like more than 1 to 20. You see, because this has already happened and it's easy to say 1 to 10 and 1 to 10 can be, once it happens. So, but anyway, take a look. If you know, right, on H1 is going to go lower, like you go here, you keep following as long as the market breaks the low. You just can keep following, right? Like that one, it doesn't work, but this one is working. This one is too big. Maybe this one not working. This one is working. You just keep following. If it is on H1, H4 is a downtrend, you can go to M5, M1. You just keep selling. You see, you already know like how we choose the order block, right? You only want to keep selling in here, and then here it didn't, this one, it didn't hit, but this one still didn't hit. This one is a losing one. Maybe if you re-enter, it will still make it. We don't know, but I would take it a maximum of 2 or 3 entries, like per one candle. You see, like the
sorry,
continuation. Yes.
Can I add something here, please? So all these trades that you showed, all of these order blocks, when our bias is bearish, we can take all of these trades because our risk is say 0.5% on each trade. We can take all of these trades and just keep holding till we see a demand zone or till we see a chalk on M5. So instead of, for example, earning a 5R, we can end up earning maybe 16R by opening all those trades and holding them.
Yes, you're right.
Because
you know what? When you say like I'm just saying based on what what usually happen in reality. That's why I always said I'm always chicken, and 1 to 5, 1 to 10, even it can make like 1 to 20, because this has already happened. So it's easier for us to say that we can use it. But if you believe, let's say again, this one is breaks below, right? So you started looking for sell from here, right? And then the next candle still break below. So maybe if you have an order here, you let it go, because you know this, the last candle is break below, and here another break below. Maybe the first one you still want to keep as long as it keeps breaks below. Basically, yes, you can keep letting things go unless like it's already happened.
Maybe
but
till this bottom.
What?
Yeah, sorry. Maybe till this bottom when we see the first bullish candle.
Yes, right. You see this one, maybe you started, if there is a bullish candle, then you can start doing it. It's a matter of choice. I'm just saying, because you know, yesterday there was an email came to me. He said that, and you said that you limit 3 maximum losses. He said, yeah, I do. And he said it's really not easy for him once he already entered a trade and then re-enter until 3 times, and it hit a stop loss. You know, when it makes you feel uncomfortable like that, that means you still don't know. To me, you still don't really know the not market structure, the direction, the real direction. Okay, like when I insist to keep entering and I give a chance until 3 times or maximum 4 times, it's because I have a big belief that the market has a high probability to go down, like let's say any 1 to 10. That's because I believe. But if you feel uncomfortable after that, meaning that you still don't know, you still cannot read the market, you still don't know the higher probability. Does it happen to me? Like he said, if you really believe, then why you do not keep trying? No, because anything can happen to the market if I do not stop myself on that trade. Even, for example, after 3rd try or 4th try, and then the 5th one, it makes 1 to 100. It's just not mine. Maybe it was proven after I hit 1 to 4, but my limit is 1 to 4. I just got to accept it because our account is not not being judged or not being counted for only one trade, but also for the long-term health of the account. You see, and I told him there are times where I entered five of my own alert, and I limit myself 3 times. All of those are all losing. Can you believe that? That means 15. That means 15. That was like, if it is like, yeah, more, if I trade more than 0.5%, that could be 7.5% of the account. How would you handle that? That alone can happen. And it did happen to me. I was talking about it sometimes last year that I said I had a bad week, that every single trade that I took, it always hit a stop loss. And it did. So you got to be prepared also for those bad days. But those, even though that 1 week I lost about more than 5%, and then I changed it because it really, not really, like, I mean, it hit me a little bit, that it makes me nervous. Then my husband said, you need to lower your risk. And then so I put it become 0.25. If that happened again, then I will still lose only 3%, then I will be good. But that month, I was still trading 0.5% until the end of the month. I was still positive after those bad days. Imagine it is not easy when you think like you could lose your confidence when you keep hitting like a stop loss after a stop loss after a stop loss. That's why maybe you don't do anything wrong, your order block is correct, but the price keep hitting the order block, and whenever there is a fall, your order block was not hit. It's just like that. The price do whatever it wants. And yeah, so it is not like you do not want to think like I always hit a jackpot 1 to 5, 1 to 10. some people do better than me. They can hit 1 to 15, 1 to 20. And I saw that with my eyes and I said, oh my God, their psychology is so good. I always close at 1 to 10. Unless I sleep, I reach 1 to 60. Yeah, 60. That was because I slept. I overslept and I forgot to take profit over there. I just let it go. That was because I overslept. So you do not think like when you see order block is so good. I see so many chances, but I usually just take what is enough for me. But maybe what is enough for me, like you said, you can just let it go. Yes, you can. There are a very good chance for you like to actually do that. And I still need to train myself to be itchy. Even sometimes when I see my husband aim 1 to 10, the same like me. Sometimes when I see the number at 1 to 5, I'm so itchy. Just close it already so you can buy me diamond or something, That's me. But maybe you can train yourself to be like, okay, 1 to 5, 1 to 10. When you understand the market structure, then you can possibly understand at least, for example, the price gonna go here instead of only 5 5 entry or instead of only 1 entry just over here. You can hold it from here to here on M1. That could be massive, at least until here or until this area. Hold on, someone asked me.
Can I add something, please?
Sure.
In this scenario, there is a solution. If you forward test your strategy, say 100 times, and you journal all your trades. So say for this trade, I made a 5R, for that one minus or plus 8R. And then you sum it up after 100 trades. If people have patience and can do it, take 2 weeks, 3 weeks, and they know that out of 100 trades, they still may make, for example, 150R, but at some stage they had 7 losses in a row. Then it doesn't matter. Then if it happens to you in real time with your real money or funded account, you know that over time you make money. So you trust in the process, not single trades. So
yes, exactly.
That doesn't stop you from trading because you believe in your own strategy.
Yes, and I don't know why myself, when I know almost precisely that the market can go reach more than 120, I still close at 1 to 10. I just feel like I'm good at 1 to 10, 1 to 5, 1 to 10. I'm good, even though I know the market, if I let it go, it may sound so stupid, because we can get more money than that. But again, for me, like trading is a part of, when I trade as, I want to trade and really trade it to make money. I usually, like when I do challenge, I lost. But when I trade relax and take it what I think is enough, I actually make good money, from the trading itself.
It happened to me. Yes, I'm still doing my real challenge. I'm still in drawdown, but I've taken the demo challenge with FTMO. I passed it 3 times, and after I got into drawdown with MFF, I took another challenge with FTMO. I passed it already within 4 days. When I'm taking the real challenge, it's just our psychology that messes up with our brain.
It happens. It happens to everyone. Okay. Who has a hands up? Okay, Sean. Okay, go ahead. Sean, can you can...
Hi, Anne. This is Sean here.
Hi.
I'm coming in from Melbourne side, so it's like midnight to me here now.
I'm so sorry.
No, it's good. I mean, this is my first time joining you guys in the chat. Yes. So one question is that every time when I receive an auto block alert, and usually you have marked the auto block on the say H4. So my question here is, when we receive that H4 alert, when the price come into the so-called point of interest, are we what I do now is I shift, say 4 hours, switch to 1 hour, and then I wait for another so-called order block within the order block. So I'm not sure this is the way to do, or how should we go about? Because just now where you demonstrate that 1 hour, like you try every order block, if that doesn't hit, move around, keep on moving. So where is the initial H4 order block ground where they stand? Can you get my question, or I have to see?
Yeah, I got your point. You see, when we use the order block based on H4, basically we take that not based per candle, okay? Not based per candle. We are talking about for those people people basically, if you are doing it per candle, meaning that you can trade at any time. But when we are choosing the order block from H4, it is based on the market structure. So instead of we are taking per candle, for example, we are taking one leg, something like that. Okay, let's say this is another one leg, and here it breaks above. Let's say this one is break above. So we will choose this as an order block. Does that make sense? Because we are using it per market structure, not per candle. I was talking with my husband, so maybe we can also help like on a lower time frame or this, because right now like all these order block we are working on manually, and maybe my husband still have something to do offline, so maybe I don't know, we cannot promise this, but basically you can do it your own if you want to do that based on per candle. It's very easy, you know. But what we do is based on the market structure, based per one leg, that is the order block. The same, just like per candle, per structure also, sometimes it works, sometimes it doesn't. And oh yes, it is recorded, so so don't worry, so it is recorded, so you can watch this again later. So yeah, so you know that order block is order block regardless you want to take it. This is just a trick to get it, like for example, if current candle break the high of the previous candle, then the next candle we can aim for higher, but not at the current time frame, but on the lower time frame. Okay,
so in other words is, once I've received the H4 order block, and then we will wait for, say, in a lower time frame to refine further, which is from the H1, we will try to look for another order block in the same directions. Is that correct?
Yes, look, let me just give you this example, okay? Let's say this is the order block. This is from H4, right? So the order block was touched from this candle, correct? Yep. So when this candle hit, let's just for an example, you want to go to H1, for example, this is away, okay? So here is the first candle. Now you want to wait on the hourly candle where the price start break the last high. This one, right? That one. Okay. This candle breaks the last high. So you started from here, and it may a losing one. It's obviously a losing one. So we don't know. So you can go, for example, on M5. Let's say it's a losing one. Okay. This obviously is going down, and it is a losing one. If you go to M5, let's see if there are an entry, or let's just go to M15. So it's closer.
So how many time frame are we going? Keep going down.
What I usually just go to M15, H1 or M15. Okay. But right now I see the one from the H1 candle break is easier than the one like 1, 2, 3 pattern, or you go to M15, for example, if you want. Now the start candle, the candle, what is it? The hourly candle breakdown over here, right? Do you remember that? Look, here. Okay, that is a break, and then you go here, and where is the order block? This is the order block, correct? The order block is
That's right.
order block. So maybe you buy here, okay, and it obviously,
and then we fail.
Yeah, and it failed. Let's say you tried it 3 times, you lose 3, for example. I like it to be like the worst case scenario. Okay, and then so you want to wait. Okay, this is break below. You do not want to keep looking for that. So when is the next candle of H1 that break the high? Because when you get the alert from H4, the buy order block, okay, buy alert, like buy order block. So you want to keep looking for buy. Now this is the first candle that is break the high of the previous candle from H1. So on the next hour over here. On the next hour over here, you want to looking for buy, okay, from this area. So you want to looking for buy. Let's see. For example, so here is the order block. The next 15 minutes, it was hit. This one is working. If you put it at 50% like me, it won't be hit. But if you put it at the whole candle, you got like about 4 hours, probably you got it break even, because many people put it after 3 hours. You got the, what is it? You got break even after the 3 hours. But to me, I wouldn't hit it because I always put it at 50%. So this order block is a losing one. You just cannot force it. You know, you cannot force it unless you just want to see like, okay, probably over here, maybe on M15, it is a losing one, and we don't know on M5, right? Look, if it is on M5, and then you can take this as 50% over here, it actually make 1 to 8. You know what I mean?
So in other words, is once we have the alert of H4,
yes,
and then we just have to switch the time frame and to see whether it's so we cannot fix our rules. So in other words, is if we 1 hour that we have like an entry is failed, and then we try to switch to 15 or 5 minutes, and then to to re-enter the same zone.
Let's make it simple, okay? You have order block on H4. The moment you get the order block from H4, you go to H1. Let's say this is a sell order block. So you go to H1, you want to looking for an hourly candle that breaks the last low. In this case,
which is
example,
H1, another order block, right?
Yes. So meaning you just wait for 1 hour. You do not have to keep watching, right? That's why I said 1 hour is easier for everyone. So once you see the candle break the low, the previous low, so you start at this hour, at the next hour, right? You are looking for sell. When you're looking for sell, then you go to lower time frame to looking for your order block. Maybe it could be on M15 or M5. We don't know. That is when we are looking for the order block from M15 or M5. But H1, we just want to wait until the candle break the low. We are not looking for order block on H1. We are looking for the order block on H1. Yes.
So sorry, I'm a little bit
okay.
panic about
it. It's okay. Go ahead.
Now, so if the price doesn't hit into the H4 order block, it doesn't matter. Is that correct? Because we already get maybe I frame another answer is that once we got the H4 order block, we switch to H1, and the H1 to look for the same direction, but is it within the order block? That means like the same order block.
Inside the order block?
Inside the order block, yes. Or sometimes if the price just move, then we can still do another order block, but it's a H1 order block, and it's not the zone within the zone. Is that correct?
I know what you mean. Yes. So let's say here, okay? For the sake of example, this is your order block, all right? But you get entry around here. That is the safest one, because you are not aiming like 1 to 100. You still can get 1 to 10 from the lower time frame of H4. Why H4 order block remain will be very good, because it has a higher probability when the price reverse. This is bouncing and continue lower, much lower. So what you want to do, like based on the market structure of breaks above base per candle, that is just per candle. But if you base on the market structure, it usually market structure has a higher probability where the market move longer. You know why? Because base per candle, you see just one candle. If it is 60, it's just 60. Imagine from H4 candle, you can go like how many candle? 7 candle, 6 candle, still within its movement, because we are choosing the order block based on a swing high, swing low, which is contains a big time frame candles instead of per candle. But only when you're looking for an entry, then you go candle by candle on H1, for example, and then looking for the order block from M5, M15, or even on M1 around here. Look, like for example, this look like messed up, but maybe here it is below. This one is below the order block, right? If you choose this one, for example, on M5, right? If you get it like from H4, there is highly likely that, for example, if you take it even the whole set like this, you still can get 1 to 10, 1 to 5, 1 to 10. It's you see, like in this case, this is like 1 to 20, because this is per one leg, per structure. That's the difference. Okay.
Yeah. And can you move back to your earlier times? Is it H1 or before this?
This one?
Not this one. The one with a shaded blue. No, I think it's gone now.
One. Yeah, I'm sorry. So yeah. There is, what time frame should we find the indirection structure of the market? That depends on what time frame. That's depend on the kind of trader you are. Are you a scalper, day trader, or swing trader? Like for example, if it is swing trader, my husband could look go as to monthly and weekly. If you're a day trader, you want to looking for the direction from D1 or H4 a minimum. If you are a scalper, you can start from H1 and M15. All right. So Sean, do you still have any questions? Was that clear to you? If not,
yeah, I think so far so good. I suppose is maybe I just have to put in a conclusion where it's like once we have the H4 order block, and then we go to a lower time frame, and then look for another order block within the order block. So if the price wouldn't go back to the order block, then we may allow to look for the lower time frame, another order block, of course, in the same directions. And then from there, we will see whether the price come back again. And then from there, we place the order.
Yes, because our order block should be based on several or many candle ahead, not just one candle, not just per one candle. It's just a trick for you to find when you start entry and you go to lower time frame H1. If it is a sell order block, find the first H1 after the order block hit. Like let's say, like I said, this one is for example, so let's say this is the order block, okay? See on H4, and then you go to H1. So this one, the order block hit, you do not want to directly enter maybe on 50, but once it broken like this, okay, this is the first break the low, then you can start looking on order block on M15 or M5 from this hour. Does that make sense?
Yeah.
So in this case, it is below the order block, but you still have a chance. Why? You do not worry, because our order block is based on the market structure that will work for more than 2 order block. It is not based on per candle. If it is per candle, for example, hey, the last order block was break higher. So you just focus on the next 1 candle only, not 2 or 3. Does that make sense?
Yeah.
Right? Okay.
Okay. Thank you for that.
Okay, you're welcome. As a day trader, I usually find direction on the H4. Yes, that's correct. H4 or D1. That's correct. So is there any other question? I think this is almost 1.5. So unless if there are not many questions, or no more questions, so I can end up the
And
Zoom
sorry,
call.
just a quick,
okay, go ahead.
sorry, just a quick question. Just the new strategy that you said, we just look at the market structure. If it's downtrend on 1 hour time frame, every time we see the new 1 hour time frame closing below the previous one, it's bearish, and we can go for sales on M5 or M1 or M15, depending on our psychology. Or if it's going up, we do the opposite.
Yes,
Well,
that's what I said
well,
earlier.
Okay. Thanks.
That's what I
Well,
said
I
earlier.
think-
You want to look for per candle. You want to looking for, like, for example, this is you want to trade on H4, for example, and it's obvious that the current trend is in an uptrend or retracement for D1, but you see like it is getting higher, so you only want to wait until the candle break the high, then you still keep buying instead of you wait for break the low. But sometimes it's work, you know, like one candle on H4, oh my God, you can make like 1 to 10, 1 to 20 on M1, right? But that is up to you. You just want to be careful when the market starts sideways. You want to looking for per candle trading. If the market is like in an uptrend like this, it will be really good.
Well, I think James, James, maybe if I interpret your question is that when you go down to the 5 minutes or 15 minutes, I think you still have to use the same rules where you still have to find another auto block on the M5 or M15, and then wait for the price to hit. They mean you repeat the process, and then after that, then you enter, rather than you just simply, you know, move up. Because I think if we are now talking about using the auto block methods, then even in a lower time frame, we are still using the auto block. Rather, you change the strategy or change your analysis. Maybe I clarified this correctly. And
yes, you're right. You know, what's the difference is that we were talking about the H4 alert, you know, which is based on the market structure from many candles. But if it is candle by candle, basically you just can go directly either H4, D1, whichever candle break you want to use. That is just for telling you where the next candle direction would be. You know, where the next, only just one candle. But like James said, maybe if it is the next candle break the low again, then hold the next position, which is that is actually very good, you know, so you can aim higher. So because the market can go melting like this until he said that there is a slightly one bullish candle, then you stop, then you close. You can get probably here, maybe 1 to 100 over here.
And I listened to a great trader. His name is John Hugard. I listened to his trading psychology seminar. He went for 2 hours, and he was saying when we are in profit, we get scared that maybe market is going to turn around on us, and we're going to lose unrealized gains. That's why people get scared, or yourself, when you were saying when you're up 5 or you want to close it. So if we practice to do something against what our brain tells us, we can just keep holding till the market tells us it's going to turn around, not when we feel that it's going to turn around.
Yes,
that way we can hold our trades longer.
If it is free on YouTube, yeah, sure, you can do that. But it's so easy to be said than done, you know?
Yeah, of course.
Yes,
of course.
it needs practice.
Easy to say than practice. I think everyone have the fear and the greed. I think by theory, yes, we supposed to follow by the book, but sometimes in practice, the fear really step in. I think, and I think whether is it 1 to 5 or 1 to 10, I think it's all about personality and your own system. So yeah. So I think I would rather have a small win rather than a big win, but you have to bear with a continuous losses. So that affect the psychology a lot. That's how I see myself.
yeah, I see, like I said myself, is not like it's not always all the time afraid it's gonna reverse against me. Sometimes I had my analysis told me that it can go more than 1 to 20. If I know it can go more than 220, why I didn't take just 1 to 20? Because maybe because I have this not principle. I have this habit that I feel like 1 to 5, 1 to 10 is enough for me. Maybe I just want to take enough. I do not feel afraid the market is going against me. Sometimes I have that one also. But if you think you can handle it and get the maximum out of it, yeah, it will be plus and minus in everything. So you just choose regardless, whatever that, but do it whatever makes you feel comfortable. But I would suggest never trade aiming less than 1 to 3. Better yet, less than 1 to 5. I honestly, if I feel like, for example, I do not want to wait more, I could close the trade when it comes to like the sweet spot. When it comes to trading, is actually 1 to 10 is super amazing. So 1 to 5, 1 to 6 is really good. But if you want to trade, you do not want to do less than 1 to 3. So I said to some people like, I cannot reach 1 to 5. Well, try 1 to 3 because the stop loss, maybe he wants to put it higher, you know, give the market time to breathe. Like, let's say for the sake of example, this is a break of structure, okay? And this is the order block for sell. So some people maybe just want to put instead of exactly like that, but because this is close higher, okay, I will just put my stop loss in there and in here. So instead of getting 1 to 5, unless you are willing to lose some trade first over here that it will make 1 to 10, well, you are willing to make like 1 to 5 without a loss. That's also doable. This is just an example. So some people they want to give a market to breathe like this. While me, I just re-enter, you know, because so it will be the same by the end if you are aiming 1 to 5, you know. So I'm aiming 1 to 5 or 1 to 10. So he get it, like for example, this one I will aim 1 to 3 because of I hit losses. He didn't get 1 to 3 because he didn't hit the losses. All right, so I guess that is all, guys. If you still have any more questions, we will always do, you know, I do my best that we could do it every week for this Zoom call, and we will talk more about like, you know, practice. If you want to read like the market structure, where do you think the market could go, practice and practice, keep reading the market, like how to read the market structure between minor structure and main structure. So yeah, we just can talk just about anything, even if it is the same thing, because the market keep changing. So we can discuss it like together, because basically by keep doing this like weekly Zoom call, when you say out loud like James and also Sean or any others, so later on like Joseph, to actually start explaining the way he or she look at the market, it will be really good practice. Because sometimes like when you say it out loud, like how you read the market, like what I'm doing to you guys, it usually can you know, like the knowledge itself will like stick to your brain, like you will always remember that. Like that's what I have been doing. Like, you know, maybe you can get the ideas like what happened to me, like about this candle break. So who knows? So we'll just keep doing this, and hopefully like every week. And also next month, I'm going to go to the US. So maybe in July, the time will be different for a Zoom call. There will be still Zoom call when I'm in the US. I'll stay probably for a few months in there just to check up my parents. And yeah, so that's about it. So thank you so much, guys, for coming. And
Thank you very much.
Yeah, okay. So I will upload this to maybe to YouTube. I don't know. So we will just see it. So everyone who cannot come still can watch this video. Thank you, guys.
Thank you, Anne.
Okay.
Happy
bye-bye.
weekend. Bye.
Thank you, and bye-bye.